Governor, thank you very much for joining us here at the World Economic Forum. Just tell us, in your view, do you think that monetary policy, or to what extent has monetary policy assisted the African continent in its development over the past 25 years?
Well, there have been fundamental changes in economic management on the African continent in the past 25 years. African economies are now more characterized by macro stability than macroeconomic problems. Today, when you talk of the top 10 growing economies in the world, 6 of those countries are found on the African continent. And what we have seen over the past 25 years had been that many African countries have been reforming their own monetary policy framework. This year, South Africa will be celebrating 15 years of inflation targeting in South Africa. And when you look at many of those other African countries, what you actually see is that monetary policy frameworks are now beginning anchored and very clearly with a target of what monetary policy should be doing. In the period prior to this 25 years, you were talking about hyperinflation in a number of African economies, and today low inflation is more of the norm, and low inflation has got to be maintained. And the reason it has to be maintained is that inflation actually hurts the poor. It steals from the poor. It steals from people with fixed income. And I think that African economies have done a commendable job in stabilizing the African economy.
Now, we know that Africa is not one homogeneous blob. There are lots of differences, lots of different countries, 54 countries at that. But do you think we're going to move to a point where, like the US, there's a lot of focus on looking at the rate of employment in economies, given the fact that we do have very high inequality and very high unemployment levels across the continent?
I think that the biggest source, you're correct, biggest source of inequality on the African continent, but particularly in South Africa, is that we have got too few people who work. And so you can't even speak about distribution of income. You've got to be focusing on getting people to work, and thus they would be earning income. Now, we say that should we be looking like the US? It's a very interesting thing that the mandate of the US Fed tends to be very confused. And if you read consistently, what they are saying is that they are talking of their balance being inflation that is below 2% and unemployment that is around 5.6%. Economists call this the natural rate of unemployment. That is how they had identified their natural rate of unemployment. But that is not an economy that has got structural problems. Ours is an economy that has structural problems. Many African countries face significant infrastructure deficits, and that you cannot deal with those using monetary policy. You need structural policies to deal with that. Hence the issue of Africa Vision 2063, because it was beginning to grasp the issues, the structural issues that are confronting the African continent, and saying that how do we grapple with it? And you might be knowing that in terms of infrastructure, there are these corridors, the North-South corridor, which South Africa is responsible for, the East-West corridor, and so forth, to begin to deal with the infrastructure bottlenecks that African economies are actually facing.
But, you know, when we look at emerging market central banks like that of South Africa, they seem to be hamstrung somewhat, because a lot of the narrative in the financial markets has been about what will the US Fed do with interest rates, when, and so on and so forth. To what extent does that actually hamper African economies' ability, or central banks' abilities, to make decisions for their local economies?
Shall we also say that when the US Fed embarked on quantitative easing, emerging market economies benefited from massive inflows of capital, and many of the countries couldn't absorb this capital. Even a country with sophisticated financial markets like South Africa couldn't absorb this capital as productively as we should have had. We did benefit from these inflows. We had a massive infrastructure investment program. We are running a current account deficit. We were able to finance this current account deficit at ultra low interest rates because of the quantitative easing. We had always known that quantitative easing will come to an end. And it's no longer a question of if, it's a question of when. It's a question of timing. Will it happen in July? Will it happen in September? Will it happen later in the year? The US constitutes more than 25% of the global economy. So it goes without saying that actions that are taking place in the US would actually affect us. And what you should be asking is, did we use the space from the time the US loosened monetary policy? Did we utilize that space to embark on the necessary structural reform so that we take advantage of the environment that we have? And I think that when you look back, the arrival of those capital flows caught many countries unprepared to be able to take advantage of those flows. That said, when the US interest rates begin to rise, many emerging market economies will be affected, including ours, being a small open economy. And the manner in which the South African economy would be affected is through the repricing of South African assets. You had capital flows coming in, which improved the pricing of financial assets. And when you begin to have outflows, those financial assets have to reprice. Secondly, is that when those capital flows were coming into the country, we saw our currency appreciate. And every time there is any indication that there will be an interest rate lift-off in the US, we see that there are gyrations in our financial markets, and the exchange rate of the rand also is a very important indicator, and you could see that it gets affected. And what we then face is how much of the news that there will be an interest rate lift-off already priced into the South African financial markets. And the fact that every time there is this noise, there is a reaction, it suggests that it is not fully priced.
Now, lastly, Governor, you're here. Obviously, South Africa is the host country for WEF, and you're obviously a very senior person. You're the Reserve Bank Governor of South Africa. You'll be talking with other Reserve Bank governors and finance ministers, no doubt. What do you hope to take away from this type of forum?
Well, I'll be attending a number of sessions in areas which central banks have a say in. I'll be attending sessions in the area of financial inclusion, on the development of African capital markets and so forth. And the focus is, with respect to capital markets, is to what extent can African capital markets be mobilized to fund Africa's development, to fund infrastructure on the African continent. And on the issue of financial inclusion, what lessons can be learned? South Africa had improved, for example, financial inclusion from around 45% in 2002, and we are now closer to 80% of adults now having bank accounts. And you'll know that the NDP had set a target to say that we must move towards 90%, just slightly north of 90%. And what are the lessons on financial inclusion that we could take? But also, more importantly, in my interactions, I would like to debunk the myth that financial inclusion necessarily means throwing credit down the throats of the poor. Financial inclusion has got to be broader than access to credit. It's got to be availing financial services to people at fees that they can afford. Affordable transactional accounts, affordable insurance, and so forth. And that, for me, if we come out of here having a clear understanding of what we need to do to mobilize resources on the African continent to fund infrastructure development, and secondly, what we do with respect to the financial sector to make sure that more Africans are actually included.
Thank you very much, Governor.
Only a pleasure.